Good afternoon, I'm Lynne Rowland. I'm a private client tax partner at Moore Kingston Smith, and in these unprecedented times we're all having lots of calls for our time and our money, and I wanted to talk to you about tax efficient giving. So I call this generosity with financial acumen. We're a very generous nation, and in the current times we are making lots of different types of donations. But every contribution counts, whether it's financial or simply giving of our time. We're also seeing headlines that many mainstream charities are struggling for support, as NHS and lots of medical related charities are concentrating their efforts and taking most of our time and available attention, if you like. So, I want to talk to you about how we can have a win-win approach to our financial giving that makes your generosity work better for you and the charity, especially in the times where we're seeing lots of charity shops shut, where you may be making regular donations. Maybe that's stopped in the recent times. So gift aid is the main mechanism whereby people make their charitable donations on a regular basis. And how it works is generally that if you're a taxpayer in the UK or the EEA, you're deemed to be making any contribution you make net of basic rate tax. And in the slide there, it shows you how £100 donation to a charity is grossed up. The charity actually receives £125. So you can receive tax relief deemed to be a basic rate tax of £25 on that £100 physical donation that you make. So the only thing that you have to watch out is that if your income actually drops below the amount of any charitable donation you make, you have to pay the excess tax over via self-assessment. So you have to make a gift aid declaration, and this is just a small amount of administration that is vital to both you and the charity to make sure that you both benefit from the donation made. So this declaration has got to include your name and address, the name of the charity, and confirmation that the gift should be treated as a gift aid donation. So quite often if you go into a charity shop, for example, they will ask if you're going to sign up for gift aid, and they normally then give you a donor number after taking your name, address, and just confirmation that you're a UK taxpayer. You can actually make a claim for gift aid up to 4 years after you make the donation, and I've given you the link there to the HMRC's website if you want more information. If you're a higher or additional rate taxpayer, you can get additional relief depending on the rate of tax that you pay, and the way that this relief is given is by extending your basic rate tax band. So you can see there how the impact of a £100 donation would be for a higher rate or an additional rate taxpayer. And this can be an exceptionally useful measure if you just fall on the cusp of either paying the high income child benefit charge, or if you have reduced personal allowances because your income exceeds £100,000. So what I'm saying is that you can be exceptionally generous, keep your allowances and benefit charity at the same time. So again, it's back to that win-win situation. There's also a mechanism whereby if you have income that fluctuates, or if you have a need to get your tax relief sooner, you can effectively carry back that gift aid donation. Anything that you make in the current tax year, for example, you can, in theory, carry back to last year, to the 1920 tax year. And so normally the 2019-20 tax return has to be submitted by the 31st of January 2021. If you have made a donation already and have your tax return raring to go and to file early, you can then get recognition for the donation made in the current tax year in last year's tax filing. And this can be helpful if your income fluctuates and you may have been a higher rate taxpayer in 1920, but if you're going to be a basic rate taxpayer in the current year, this could help your cash flow. But the main rule is that you have to have made the donation at the time that you file your return, and that claim has to be on the original tax return. So if you've gone ahead and filed the tax return already, you won't be able to amend it and make that claim. So you'd have to claim the tax relief in the current year when you do your tax return in 2021. There are, of course, some things that you need to be mindful about, is that you cannot have any reciprocity with the charity for any donation that you make. And so I list there a couple of things that you just need to watch out for, but that most people would not have a link to the charity where you're going to directly benefit from the donation you're making, but you just need to be mindful of that if you're making a gift aid claim. And it's not only assets that you can gift. Sometimes people are sitting on shares, like quoted shares, specifically land and buildings, and it may suit them to offer those up to the charity rather than a cash donation. And in that scenario, as long as the charity has the ability to accept those assets, you would get the same deduction for income tax purposes as you would for a cash donation. But it's also possible to get capital gains tax relief when you gift assets, or cash come to that. And so it's not just thinking about your income tax position. If you've had a one-off capital gain and you want to donate to a charity, in that situation, whether it's assets or cash, you can actually get capital gains tax relief instead of income tax relief if that suits you. And it could be quite an efficient way of dealing with your affairs. If you're making a claim for a gift of assets, you do not need to make a gift aid declaration. So there's some slightly different things you need to think about. A, whether you're gifting assets, and B, whether you're claiming for capital gains tax relief or income tax relief. So you probably do need to take some professional advice in those different circumstances. At the current time, people may decide that they want to give up some of their income and make donations to charity instead. There are some rules and regulations that you need to be mindful of if you're going to do this. And the main thing is that the employee or whoever is making that donation has to agree to that reduction in salary before it is paid. Once it is paid, it's too late. And this must not form part of any arrangement for tax avoidance, for example. And similarly, directors or shareholders could potentially waive their rights to dividends for charitable purposes. And again, timing is of the essence, and you've got to make absolutely sure of the time that you make the gift and the time of the waiver. So I list there what you need to be mindful of depending on whether we're talking about final dividends or interim. Leaving gifts to charity in your will can be a really valuable way of benefiting a charity and also reducing the amount of inheritance tax that is paid as a whole on your estate. So if you leave more than 10% of your net estate to a charity, the residual beneficiaries would only have 36% tax charged on that portion of the estate rather than 40%. And those gifts can take the form of cash or be specific assets. In addition, if you are an executor of an estate and there is no charitable clause in there, but all the beneficiaries are in agreement, you can vary that will to make sure that the charitable donations are made to a sufficient level that ensures that the reduced rate of tax is paid on the rest of the estate before it's paid out. And finally, I wanted to talk to you about the Gift Aid Small Donation Scheme, which is not something that rolls off the tongue easily, but this is what small charities can use to get tax relief on the donations that they may receive via street collections or tins that may be left in shops. So as the slide shows there is the potential for small charities to claim up to 25% gift aid under this scheme on cash donations of less than £30 or contactless card donations of a similar amount. There is a limit there of £2,000 in the tax year, but that's very valuable to a small charity. And as with most things that require a claim with HMRC, you need to be able to record those donations and keep records and other requirements. And you also must be registered as a charity and have claimed gift aid in that year in which you make that additional claim. but that's a very valuable relief and is quite often overlooked by small charities. And so in these unprecedented times when we're all making generous contributions, make sure that you're tax efficient in the way that you make your charitable giving so that both you and the charity can benefit. If you have any questions, you know where to contact us. Thank you.